Welcome back. Now, the online investment management service Moneyfarm is buying the digital pension advisor and consolidator Profile Pensions. The deal brings it 24,000 customers and increases its assets under management by £870 million. Well, with me now is the co-founder and chief executive of Moneyfarm, Giovanni Daprà. Giovanni, good to see you this morning. What made you want to buy this business?
So listen, we care about two things. One is what the customer needs, and I think pension is at the very top of their agenda. Today you're expected to have maybe 10 jobs, so consolidating your pension in order to have a unique view of the position and what you do is fundamentally important to make the right decision. And the second point I will say is scale. So we built a technology that allows us to manage customers in a very efficient way with a lot of scales. So being big in this business helps us invest in the product, in the customer development, and in everything that we care about, ultimately to deliver better outcome for our customers.
Is there much crossover between their customer base and yours?
Yes, it's actually very complementary because as Moneyfarm, I always wanted to have a better pension proposition, and particularly around transfer, consolidating, and pension advice. And at the same time, Profile didn't have the discretionary capabilities and I would say the asset allocation expertise that we have. So it's very synergic, and I guess that's why I think even in 2022, you can make these things happen.
You've kind of preempted my next question, which is going to be where do you see more growth coming? Is it in areas like SIPs and in pension products rather than ISAs?
I think pension, I would say yes, because the reality when a hierarchy of financial need, you should care about your pension first. So any disposable income that you have, and only, unfortunately, 40% of the people in the UK are on track to have a comfortable retirement. So it's really important that we prioritize pension. However, I think a positive things we're seeing that even in 2022, our ISA book has grown over 15% from existing contribution to that customer keep putting money in. So even with this complex situation we'll all live in, I think that still people are prioritizing saving, which means prioritizing the future in a way.
That's really interesting, because you would think at a time when people's disposable incomes are being hit, they might be saving less. You're not seeing that.
They are saving less, but they're still saving, which I think is extraordinary to think that if you look at the consumer confidence, it's the second worst reading since effectively the Lehman Brothers crisis. So we're really in a bad place from a confidence perspective, but still people are saving and incrementing their investment, which again, I think it's very good given that it shows maturity, I would say, in these circumstances.
And how do you view the competitor landscape right now? I mean, you're up against some very big, well-funded competitors, the likes of Nutmeg, which is owned by JP Morgan now, of course, Wealthify, which is owned by Aviva. Are you a bit of a David taking on some of these Goliaths?
Yeah, I mean, we're not that smaller than them, first of all, and I think that I really would like to prioritize independence. I do think that in this environment, being an independent business with our purpose-led mission really helps do things that they wouldn't kind of think about doing for the customer. And I think this is a little value added. Now with this acquisition, we're going to be 3.3 plus billion, so we're not that far, to be frank.
Very good to hear. And in terms of ISA savings, presumably most of your customers are putting their money into stocks and shares ISA. There's no messing around with cash ISAs.
So we offer only stocks and share ISA because we do think that when it comes to investing, I think being long-term and exploiting your ability to think long-term in having asset that at least try to cover you from inflation, which is a big thing, is very, very important. And with cash, unfortunately, you're almost certain you're not going to get there. So I think that it's really important to have a fully diversified portfolio of financial assets, stocks and bonds to prioritize your long-term needs.
And what about risk appetite right now?
Risk appetite is slow, but I think that our job as an advisor and a wealth management is just to remind that the simple fact that today is better than yesterday. Because if you look at the expected return of your portfolio, just to take US stocks, for example, you will now expect, in our view, about 5% return, where it was 1.5% last year. So what I can say with certainty is that investing today is better than yesterday.
Good to hear. Giovanni, lovely to talk to you this morning. Thanks very much indeed for joining me.
Thank you.